Hi everybody, welcome to the bullwaves.org weekend video, the worst produced Elliott wave weekend update on the internet. I worked hard for that title, so I'm gonna work hard to keep it. So this has been a heck of a week, and I think we have a lot to talk about. Well, I have a lot to talk about, and you can hang around and listen if you want. But as usual, I'm going to go through the 9 markets that I follow, and hopefully you find something interesting here, something to chew on for next week. Alrighty, so this is euro dollar. This is the daily chart off the high in February, early February, February, what was that? February 15th or so. We have had a 5-wave move down in wave 1, and I think we're completing wave 2, but we have an alternate count for wave 2 also. So what we're looking at in euro dollar on the daily chart is 5 waves down, 3 waves up, and expecting further kind of a cascade lower in a third wave. Okay, so the 4-hour chart, let's take a look at how that's the action of the wave 2 low here. I think the wave 2 high. I think we have a continuing wave 1 off the wave 2 high. So if we're moving down into a third wave, we'd look for 5 waves down again in wave 1 and a correction higher in wave 2. So we've got this kind of contracting range over the last couple of weeks. I think that's a triangle, wave 4, and the high this evening may well have completed that. So let's look at that wave 4 there on the hourly chart. So there you can see the wave 4, wave 3 low, A, B, C, D, and E. We've got a kind of, it's an awkward move in wave E, but it's still kind of, it counts well within the framework of a triangle. So we'll stick with that idea. I had thoughts earlier this week that this sharp move down here was part of the next, was wave 1 of 1, let's say. Or sorry, wave 1 of 5. But that didn't transpire this evening. We got a break to a new high there. So it seems to have come off the trend line there this evening. So we may well have a completed triangle now. And next week we'd look for another 5-wave move down below support there, 112.15, to complete wave 5 of 1. So then we'd have a completed 5-wave down structure. I'm saying a lot of 5s right now, but bear with me. We'll have a complete 5-wave move in wave 1 green. And at that point, we'd look for a correction higher in wave 2. So we're kind of most likely going to continue to range for the next, let's say, into the end of the year anyway, in euro dollar. Okay, so let's move on to pound dollar. Next week, I expect a move down to complete wave 1. Okay, so pound dollar. 4-hour chart. It's been a bit of a strange one this week. We've had this, well, actually for 2 weeks now, we've had this just drift to the sideways, or drift sideways off 2 very nice impulsive patterns to the downside. It's hard to know how to quantify this at the moment, but I had a thought this evening which may offer some clarity. Let's take a look at that. In general, we've still got 5 waves down in wave 1, and we possibly have a irregular flat wave 2, or you could call it a running flat also, depending on how you look at it. So let's get down to the hourly chart here and kind of parse out this little move here. Okay, yeah, hourly chart. So we have the possibility of a wedge pattern here. So a leading diagonal, so you could call it something like this. 5 waves, slight fall short there. It might be a failed 5th wave within a wedge at wave 1, and then maybe some sort of a complex wave 2 correction, which is, I don't think, done yet. So that would be the alternate view here. The current wave count still counts as a series of impulse waves down with a possible wave. With this whole sideways move here, a possible wave 2 correction. I'm kind of leaning against that at the moment, but we'll see how the action next week it may offer some clarity, let's say, in the short term. I would expect this wave 2 here to kind of push back above wave A there. This wave C, to push back above wave A. So maybe somewhere within the 129.50, 129.40 range to complete. That would be 3 waves up in wave 2, and then we'd look for a break of support again in a third wave down. If the price does push up towards 130.70, that would be the initial resistance there of wave 2, then I think I'd probably switch that alternate count. Or else, if something else better kind of raises its head, yeah, it would a push up to resistance would change things in the short term anyway. Okay, so for next week, we want to see this correction close out and a move down into a third wave, hopefully. Okay, so dollar yen. Dollar yen again is kind of showing the same obstinate inability or unwillingness to move in any particular direction. It's just drifted sideways since late September. Is it early October? It's pretty much just drifted sideways within a kind of a tightening range. I'm calling this a triangle now, so we could have a pretty complex type of maybe a double combination with an A wave down, a large triangle wave B, and maybe a move down into a C wave here. Now this triangle could also be continuing. I mean, you could get this extending even further to a new lower high next week maybe, but for now we have an internal 5-wave pattern in a let's say a contracting range, so we'll go with the idea that wave B is complete and we move down into a wave C. We did get a drop off that upper trend channel line, so we're looking good. For next week, I'd still view wave C as ongoing, and we should see new lows in wave C next week. The other idea here is that this, we've got to the daily chart, this whole move here for the last couple of years is an alternate triangle view, and that also calls for a drop down into the 108 probably area again. So both wave counts are looking for a decline probably into 109, 108. So I think we're probably pretty set on that happening for the next week anyway. All right, let's get to the interesting one, eh? So the Dow today has been, well, the last few days, the last week even, or actually if you went back for the last few weeks, you could call it an absolutely wild market to be in or to be trading. The last week we were sitting at a high, or we created a gap higher on Monday, but then on Tuesday we blasted lower again. We were speculating last week whether this the G20 would kind of come up with some sort of pseudo deal, and we might get a gap higher on Monday. We did get a gap higher on Monday, so we were calling this now a irregular flat wave 2, and this week we were looking for declines again into a third wave. I think we may well have the beginning of the end of the bull market written on the wall. The writing is on the wall now. This move off the wave 2 high is a clear 5-wave pattern, and today's high ended a 3-wave correction. And off today's high, we had a very nice impulsive move again lower. So if there are still any bulls left in the market, they have got to be shivering in their boots right now. Although, you can never really see the bubble you're in, can you? That's kind of the definition of a bubble. So maybe I'm wrong on that one. Okay, so we've had this nice 5-wave move with an extended wave 3 in the center, and 3-wave correction into today's high. What was that? 25.90 or so. And off today's high, we got a nice impulsive move lower again. So 25.90. We had another 600-point decline or so into this evening's close. I think the aftermarket is still churning away, but it's not going to move very much. I think we could have a wave 1 down off the wave 2 high. So if we are being technical about it, we have wave 1 down, 3-wave correction in wave 2 blue, wave 1 down in green, 3-wave correction in wave 2 green, and maybe now a wave 1, and we might get a pop early Monday to complete a wave 2. And if that happens, well, then we're on for a kind of a rush lower in a series of, well, a rush lower down into a third wave. And I would expect that to probably begin by the middle of next week. Now it depends on the kind of it depends on how this this current decline continues on Monday. We may have to change up to a higher degree if we get let's say a gap lower on Monday to break a previous support, which is 24,120. Excuse me, now I'm kind of suffering this week. If we got a gap lower on Monday to break support, well then we'll probably shift this this label up by 1 degree, and we'll kind of play it by ear, I think. But for now, we've got a bearish impulse wave off the highs of wave 2, and we're looking for, let's say, towards the end of the month, this should continue with kind of further impulsive declines and a very rocky start to next year. If the larger pattern holds, which I think it probably should at this stage. Okay, so I think that's covered next week. Let's move on to gold. I'm quite pleased by the action of gold this week. It was we got a break of that previous high there at 1243. So break of 1243 was what we were looking for. That's what we got. We got this early during the middle of the week there, we got this kind of contraction. So I'm calling that a triangle maybe. So that could be wave 4 of 3. And if that's the case, well then this spike higher this evening is likely wave 5 of 3. So we have a target there at 161.8% extension, so that's about 1265. That's been sitting there for a while, so I'd like to see wave 3 in brown here. I'd like to see that break above that channel, hit that 1265, maybe even hit 1270. And then from here on out, I'd like to see that the market to start accelerating. So far, you know, we could still count this as a 3-wave move up within a channel. I'd like to err on the side of the bullish view at this point in time, even though I have been there for a good while now. If you've been listening to me for a while, you know that I've been bullish on gold for a while. But let's say we're looking good this week, and we should extend higher next week in a third wave. Okay, so crude oil, that's the 4-hour chart in crude oil. We were looking for this correction higher in wave 2 this week, and I think we're actually drawing to a close on that at this moment in time. It was a long time coming, but we had a nice rally this week. It's been retraced a fair bit, but today again a nice spike higher to kick off that C wave of wave 2. So I would like to see a further continuation of the rally early next week, and a completion of three waves off the recent low, and um, that would signal, or that would complete a bearish, a very large bearish impulse wave off the recent high at 76. So again, even though we might get a short-term rally, I think it will remain short-term, and we should break to new lows over probably the coming month again. So next year is looking pretty bad for crude oil at this moment in time. Okay, so the hourly chart, here's that correction in wave 2. It's been pretty brisk, and yeah, but I was speculating that it would be incredibly hard to trade this correction higher anyway, and so far that has kind of that idea has held. So I don't see how in God's name you would have traded this very volatile market. But let's say for now, I think we have an ongoing three-wave pattern within a trend channel here in wave 2. We had a nice three-wave move up in wave A. We had a nice three-wave move down in wave B. And off the wave B low, we had this 1, 2, 3 possible wave 4, and that would call for another rally in wave 5 to complete C and to complete wave 2. So the other way of looking at this would be again another irregular second wave correction in wave 2 at today's high, but I'm not in favor of that at the moment. If this kind of contracting price action continues early next week, I mean, if we get this range continuing to contract and bounce around, well, then it'll most likely point to a B wave triangle off the wave A high. So we're still kind of a little bit in, as always, as with every damn correction, we're still in the woods. We can't really see the woods from the trees at the moment. I'd still like to see a run up to the upper trend channel line there to complete wave 2. So for next week, tentatively looking higher, with the caveat that we may have a triangle B wave underway also. So let's keep that in mind. Okay, so the S&P, again, S&P is, I'm going to pretty much echo what I just said in the Dow. The pattern is looking horrendous if you're a bull. So we had this large, you could call that a left shoulder there, the January highs, and the break lower into the kind of year-long correction. So that whole high and lower high would be a left shoulder. The kind of neckline there would be about 25.30, so that would be the previous low. We've got it was a very kind of weak head, if you were to call it a head, and then we broke lower to a nice right shoulder here. So in terms of like a head and shoulder pattern, I think we're pretty much complete now. It's taken a year more or less to complete, or 10 or 11 months, but here we are, and we're at a point where we could cascade quite quickly lower into a third of a third wave. So I would be expecting this third wave to pull us down towards the 2000 level, or maybe 2100, something like that. Now, if we get out to the daily chart, you can see that we have kind of a shoulder of support there at around 2100. So wave 3 down would probably find some support in that level, and that would bring us back to, oh gosh, the 2015 highs. And in a longer term, from a longer term perspective, if that happened, or even if we got wave 3 lower into the 2100, we got a correction in a fourth wave, and then the fifth wave lower would break 1813, and that would be the previous fourth wave here, way back in January 16. So 2.5 years ago, or 2 3/4 years ago. And from on a long, like I said, on the long-term perspective, if that wave 4 low breaks, well then we're done. We're a little bit away from that at the moment. We're a whole lot away from that. We're 800 points away from that at the moment, but we're on the verge, or we're on the verge, or on the edge of a third wave down. So I may even speculate, if I were to speculate, that this third wave down would be a very sharp affair, and it may not take very long to do a lot of that work. Maybe even by the end of the year, but most likely by the end of January, you'd be talking about seeing some kind of support happen around the 21 or 2200 level. Okay, so let's get down into the 4-hour chart. So we've got that 1-2 pattern off the high, and we're looking at another 1-2 pattern to the downside to kick off wave 3 lower. So let's get down into wave 2. So again, wave 2 was a irregular by a few pips. You could call it just a simple running flat. We were only marginally off on a lower high in the S&P, but kind of due to that gap higher, I think, on Monday morning there. But immediately, come Monday evening, we had sold back down again. So we were playing with the idea that that was a 1-2 off the high, and we got this nice impulsive sell down in wave 3. And now we have wave 4 complete, and another nice impulsive sell down in wave 5. So that's the move off the Monday's high. Now counts as a nice 5-wave decline, and we got a 3-wave recovery into today's high, and another sharp and impulsive sell off into this evening's lows, and we're closing near the lows as well. So this is pretty bad in terms of like the forward view here. If we've got a 1-2 pattern, and then like I've shown on the short term, another break of support with a further lower high might complete a lower degree 1-2 pattern, and then you are talking about a dead air space between here and 2100, which I'm not going to enjoy, but again, we've been waiting for this for a while now. We got the recent high there at 2708, so early next week I want to see that level hold as wave 1 and 2 complete off that high, and then by the middle of next week we'll be looking at kind of capitulation point, or where we turn into a third of a third wave down. Okay, so that is the S&P. Let's get into silver. Looking at silver over the last few months, it hasn't, off the most recent lows, it hasn't been as impulsive a move higher as gold has. It hasn't been, let's say, as vigorous or as encouraging as gold, but for now we're still moving higher and we're still creating higher lows. So I'm still tentatively on the bullish side here in silver. On the short-term chart, we've possibly got a 1-2 pattern complete. We had a 3-wave decline off was that Wednesday's high? Yeah, Tuesday's high. We had a 3-wave decline, and then yesterday and today we've got a push higher again. So remains to be seen whether this this continues higher in wave 3 of 3. I think if we got a break of that previous 4th wave there, it would go a long way to kind of to, let's say, if you can confirm something, it would go a long way to confirming it. But for now, in the short term, I'm bullish. I don't know how to describe this really. The wave count is bullish. The extremes in negativity in the futures market is bullish. And like I described this evening on the update, even these two facts alone, or even the fact alone that the futures market seems to be so dead set against silver, or so short silver in the long term, or on a historical basis, let's say, the market is incredibly short silver. That fact alone would point me higher. um, so I am hopeful that this 1-2 pattern to the upside will hold over the next week or so, and we'll start breaking resistance levels. And once that happens, well, then I think we could probably turn full on bullish, as I am in gold. Okay, so that's silver done, and here's the Treasury market. The 4-hour chart. I'll go to the daily chart, 4-hour chart here. Yeah. So I had been counting this as wave 1 of 5, this recent decline, but we got the volatility in the stock market drove people into treasuries again, and we got a spike higher, which took out that previous 4th wave high, and so that kind of just changed the degree of the wave count, basically. So we've got wave 3 complete to the downside, and now we're pretty much complete on wave 4, I think, also. And that would suggest that we are going to see another decline in wave 5. And it should be quite a large decline. So let's see if we can pull apart this this structure here to see where we might look next week. On just as a note, this is still being counted as a flat correction, even though it's no way from flat, but it's a three waves up in A, can be counted as 3 waves down in B, and most likely a 5-wave structure higher in wave C. Excuse me, my throat is giving way now. So that gives us a 3-3-5 structure and a pretty much complete 4th wave. And the fact that it rallied up to meet that previous 4th wave high at one lesser degree. So again, we're starting to kind of we're starting to kind of tick off the little boxes that we'd be looking for a turning point in a market anyway. 3 waves, internal structure is nice. Previous 4th wave has been hit, and now we should start to look for an impulse wave lower again. Okay, so we've got a lower high, but I'm still tentatively calling this wave 4. The sharp move above that low counts better as a 5th wave rather than a correction higher. Now we could change our mind on Monday again if we start seeing a break of these previous lows, a pushback below 120 again, without a new high would most definitely kind of point us in the direction lower again. Now my voice is given up, and that I think is God telling me to stop right now before I say something stupid. Okay, so thanks so much for being with me during the week, and I wish you all a nice weekend, a happy and healthy, peaceful weekend. We're rolling into Christmas time now. It'll be a nice break for everybody, but we still have a lot of market action before we get to that. Over the next 10 days, before we get to that holiday break. Godspeed, everybody. Have a great weekend, and see you back on Monday evening for the Monday evening update. Bye-bye.